It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the ones that have had the best improvement in momentum just this week. We call that the Launchpad. Gary Glover has selected his favourite charts from both the 30 top momentum companies and the 30 Launchpad leaders. Good morning, Gary. How are you?
Yeah, I'm great, Chris. Hey, before we start today, just thought I'd pay homage to the father of momentum stocks here. William O'Neill passed away actually this week. So if anyone who hasn't read How to Make Money in Stocks or hasn't followed William O'Neill's sort of work there, then you definitely should be looking at it. A couple of his great quotes was one of the great paradoxes of the stock market, that what seems too high usually goes higher and what seems too low usually goes lower. I think one of the other comments, it was the first thing he learnt about getting superior performance was not to buy stocks that are near their lows, but to be buying stocks that are coming out of broad bases and beginning to make new highs. So again, sort of really along the track of what we're showing here with the 30/30 report, is that quarterly momentum stocks being obviously the strongest, and then obviously the Launchpad being what stocks are sort of strongest on the weekly there. But yeah, just quick homage to William O'Neill. I think that he's really sort of the founder of of this what we call momentum stocks and trading those, and some of his rules around that definitely worth looking at. There's some great sort of trading rules around what he sort of taught over the years.
Oh, definitely. I remember one of the best books that you gave me is a short or quite a lengthy summary of some of the best charts that he put together over the last few decades, some of the best trades, and it really just breaks down his analysis over decades and looking at where the opportunities are and how he saw them. So that's a good flick through for like a visual update of charting patterns, and it's all coming back to William O'Neill. So
studying the all the biggest winners of the past. That's definitely some great lessons in there. I think what's his name, Ross Haber, and the young guy Richard Moglen, they've just put together sort of something recently as well, something up to date, which is fantastic as well. But we'll get into it today. Number 3 on the quarterly momentum VSR. I thought this was sort of interesting. Look, sometimes it's sort of hard to sort of say out of when you get a bit of a pop there on a big move. You really want to sort of wait for it maybe to congest here. So this sort of did congest, and then we saw volume again, and it's had a few little pullbacks here, Chris. But so far we're not seeing any. That's the thing about when these things do pop. You get that first day selling down, but if no sort of selling follows through, they tend to sort of keep going higher there. So that's sort of one of the more interesting ones that have sort of popped up early in the list. Most of the other ones have probably moved a bit too far, a bit too hard, or a bit too poppy there. But I was looking for a few that had sort of come out here. I saw that Audio Pixels actually on the list there, number 6. Probably the big volume there was probably what catches the eye there. And then probably interesting one in here, Chris, actually did have a nice little VCP in here, but then it sort of failed. It actually came back in the range, so probably would have stopped you out, even though through that whole period there wasn't really any sort of selling, and then we sort of popped out here and gone again. So potentially you might have re-entered on a break of this zone here, but yeah, so this is probably a bit of a wait and see here now. See if there's see if it can sort of consolidation there, but the big volume is probably just things that sort of stand out. I think last week MEI was on our list. We talked about how it consolidated on that previous high, had a bit of a pop out. I think at the time there might have been these 2 days here, Chris. Last week we were looking at this and saying there was no selling coming in. This is things. So sometimes these stocks can sort of pop here and start to move higher, but if you're sort of long these stocks here, if you see this sort of little pullback here and no volume, that's what you want to see. That's exactly, because nothing goes up in a straight line, so you're always going to have your little pullbacks there. But if you have a couple of little light days down, no selling there, then you pop back up on bigger volume. And even here, like we had like 2 or 3 days of going down here, we struggled to sort of sell off here. So and it's popped again. So that's what we sometimes going to let the chart sort of tell us there. If we sort of see a heavy volume or a second heavy volume day, that's what you don't want to see, and that would probably have me out of some of those sort of smaller stocks there. So a bit harder to sort of trade some of the smaller ones, but that's where you sort of got to probably watch the price action each day there. I thought Cat was interesting here. Just one observation here is obviously it had a pretty decent move, some decent volume through there. That's broken above a few swing highs here now too, so that's actually sort of moving out of the range. So the weekly is we've sort of come back down and retested some old lows down here on the weekly, sort of back down at 60 cents, big level for the stock, and a little bit of a false break on of this previous low there, and just some volume starting to come in here. So this is going to be interesting to watch here. The one thing people won't associate with Catapult CAT is that this is an AI type of company, that it is basically analyzing data, sporting data. So it's probably an AI company most people don't talk about. I think actually maybe this might be one that they might be talking about over the next few months here. So to me, it's a bit of a wait and see. I'd like to sort of see this consolidate. But yeah, I just sort of put this one back on my list here today, just because I thought, well, I haven't seen this one for a while. Always sort of liked this company here, but it sort of takes a while. It's been operating probably not, like a lot of these sort of tech companies operating at a bit of a loss there. So it's, really try to get out there and get maximum coverage, get everyone using their product, but not really charging for it here. But I think over time here, hopefully they'll be able to start charging for it and being a bit more profitable. Which we've seen here. Once these sort of stocks get away from being charities and then start hitting the P&L line or getting close to break even stuff, I think that's actually it can be quite a significant point for the stock to sort of turn here. So, and we often see those companies, IPOs, they come on and they go a bit hot initially, then they fade because the sort of news sort of dries up, and oftentimes they'll come back and retest the old lows, and then that's usually where they can build there. So if you look at some of the successful companies in the past, sometimes it's quite a few of them do that. So there's a bit of a cycle there to sort of keep an eye on. ENR was at number 10 here. It was actually last week we were talking about this bar here. We were talking about how this stock here had pulled back here for 5 or 6 days, and no selling volume here. So this has had a pretty good run, popped up here, but then again you get one day down here, a little bit of selling, but then the next few days here pulling back here, no volume. And we saw that one day little pop there. We've seen a bit of volume come in here, which is maybe slightly of a concern here, but so far it's still staying positive here. So this just still looks sort of constructive, but probably that sort of heavier volume bar would just have me a tiny bit suspicious, but still looks okay. Probably would just tighten my stop up there. MP1 was on our list last week. That's continued to kick higher there. Sort of one stock that I have sort of traded there. I traded most of it out. DLI was actually one that I thought was pretty interesting, just because it had a pretty decent run, taking out a few swing highs. Pretty healthy volume breadth the whole way up here, Chris, as well. So, and now we're sort of pulling back in that little tightening manner here, and the volumes, really starting to sort of shrink in here. So again, maybe you get that sort of first day of selling here, but then this is all sort of lightening up here. So we like to sort of see this, that's what you're sort of seeing, a strong move. Hopefully the whole thing dries up again, exactly like it did in there, no volume in there. And then they pop in there. They can go one more run here. So sometimes this is your bigger run and then your consolidation. Elliott Wave will often call this like a wave 4. But you can still get the thing about this, you can still pop here and go to a new high, which is okay. So to be honest with this is sort of probably have a low failure rate, a lot of these. So because obviously the momentum's so strong here, and then having a cool off, like a lot of them will pop here. So I'd say like a lot of them will at least rally higher. If they don't go to a new high, they'll get up there before they fail. I think most of them will go to a new high. So some of those will kick on a lot stronger. Some of them will only just go slightly higher. So, but I think I'd say a large proportion of these would actually at least try and rally here, even.
Well,
Yeah. So just yeah.
If they're in the same group, if they've got sister or peer companies, sort of using terminology of sort of Jesse Livermore, those sister stocks. This is DLI, Delta Lithium. We've seen
That's
those
right.
lithium stocks. If they're a lot of them are doing it, the odds of them breaking out and running from a pattern like this, and it doubles. So
Yeah, that's right. Yeah, I was going to say, yeah, tell the viewers what the odds are. Because you told me previously there, and I thought that was actually a pretty amazing stat. The fact that if you're if that sector's running hot, your chances of actually breaking on the upside 2 to 1. So yeah. So
we broke through this on lithium and twice and uranium in the last couple of years, and we'll put some links on the screen. But when they've got a similar pattern in the similar time frame, it's just amazing how much easier it is to trade. It's like you've already got the blueprint from a two or 3 weeks earlier laid out. But with this kind of pattern, it can be a matter of days. But anyway, it's, as you said, it's a good chart, and it's looking quite nice in the pullback.
Yeah, so now the report you sort of send me, Chris, there with the sectors, which sectors are the strongest there, then that's, to be honest here, like a lot of, I was going to say a lot of my winners, I might even go as far to say maybe all, but a majority of my winners are in the green section of that report. So to the viewers there, what that means is they're in the sort of the top third, or the, so they're the strongest sectors for the past, obviously, 3 to 6 months. So all my winners, I would say most of my winners would be all in the stronger sectors. So whereas probably some of my losers they're definitely outside of some of those winning sectors. Yeah. So there's
importance of the sister strength and the industry and sector theme.
No, most definitely. Archer AXE, this is sort of one that was a bit hot there last year. Had a big fade here. It's had a reasonable pop here actually, and some reasonable volume there. So this will be interesting to watch here, because that's a pretty impulsive move. Probably have a little breather here, and then just important to watch that breather there. But that's definitely sort of one that we should be keeping an eye on, because it was a bit of a leader previously. ABC we sort of covered last week in detail. If anyone didn't sort of see that, I'd go back and look at that. So covered it in a bit of depth. AZS, I think this actually might have been on the list there last week as well, Chris. Sort of, and I think from memory we were talking about how the stock was just holding above this previous high, so a little bit of a congestion there. Maybe came slightly back in here, but again, this is sort of like, but stocks that are trending up, we're sort of still sitting above the high here. Look at that consolidation. From this point onwards here, that's the sort of run up in the high bar. The next day is low volume, pretty low volume, still pretty low volume. We go down a couple of days here when it's literally no volume coming in. So it's telling you no one wants to sell this, no one's ready to sell the stock yet. So that's why, I know everyone's, learning technical analysis is learning lots of different, indicators and all sorts of stuff here. But, price action and volume is really sort of all we need to sort of know, in my opinion. Some of these moving averages are useful. We're looking for, particularly if they sort of coil up as well, if they have a bit of a breather and start to coil. But really just, looking at the volume there and seeing new stocks go to new highs and then consolidate on low volume. That's all we need to sort of do. It's very constructive there. One stock on the list I thought was again, we looked at this last week actually, was a couple of weeks ago we talked about uranium and the hydrogen stocks. They were the two that had a pop there. So I think we sort of mentioned there that this had sort of popped up to the high there, consolidated again under the high, had a little pop there. Space, we got our one pullback, second pullback, third pullback. So this is a little VCP pattern there. And then once we break that, it's sort of gone on here. So this is pretty constructive there. Lastly on the chart here, Chris, is what, 1, 2, 3 days up here, pretty decent volume. So that's pretty constructive. I mean, I look at this and think, well, this can come back, retest the old high, be nice little re-entry point.
Is it significant that those 3 solid days of volume is as it's breaking through the highs of November, December, also April, May?
The thing I like about this is the good VCP patterns. You see the volume run up into the high, and then it cools off, and then you see the second wave. You see the volume again, and then it cools off, and then you pop and you see the big volume again. And that's the one thing I sort of having, the last couple of years of really focusing on this pattern is that, you see those waves of volume. So they see the price wave, and then you see the volume wave, and you see the price wave and the volume wave, and then price and the volume go again. And that's when you get those moves. And if you go back and look at some of the ones that have run here, particularly made these VCPs, that's what they look like. So that's all we can hope for is for it to look exactly like this. So this is a good sign that we've actually broken out of volume here. So this is definitely one. If we see some little cool off here, this is definitely one to be looking at there, because there's a fair amount of commitment in those rallies there so far. What about the EOS number 20? Look, it's had a bit of a pullback there. It has started to overlap, so I do like to sort of see it sitting above the high. But again, here we've just sort of some reasonable volume there, some reasonable volume this move here, bit of a volume spike and then go sideways. So little VCP and then we break. But so far, again, this has sort of had a bit of a pullback here, but hardly any selling there, Chris, so far. So still sort of constructive. I'd like to sort of see it sitting above more so rather than overlapping, but still sort of fairly constructive there. So looks all right. Appen's pretty interesting here. So we're talking about this one. Previously it's obviously all the chatter here. The thing for me is that it did sort of go and make this false break here. So that's sort of one of my sort of little favorite patterns. Apart from the VCP, the false break is the other one that I like here, because then you go to that new low and then you break back above the high. Then you sort of if you can buy that sort of back above here, then there's your stops back here. And if it does run here, the sort of risk reward's pretty high. So interesting thing here, Chris, is the volume. That's been pretty robust through here. So I know there's probably a little bit of smoke and mirrors here with Appen. Was a pretty successful business, sort of running through to sort of 2021. Just probably the last year, 22, 23, sort of its performance has definitely waned, and probably the last 12 months of performance has been pretty horrible actually. But they do have a presence in this AI area. It's just whether it's got legs or not, or whether it's just all smoke and mirrors or not, it's still to be confirmed, obviously, by what they can sort of turn around on in terms of their results and numbers and stuff there. But price action, there's definitely some commitment in this rally here. So definitely a sort of change of character, and some reasonable volume behind this. So I love the fact, when I see a false break like this, we're looking for it to go above if they go to false break to a new low, they usually go back to retest a swing high. So to me, just going above 323 is my sort of first short-term target. So I think that was sort of my target on the model portfolio. So I'm hoping sort of this will probably just have a bit of a breather here now. It's had a good run. Might have a little pause, and then we hopefully we'll see some sort of pan out a flag or consolidation. But this is pretty interesting here, just because of the volume's pretty decent. So, but yeah, the counter move will be pretty interesting now. I think it's just because that volume's been pretty decent there. That's sort of that's pretty positive. Task sort of one that I quite liked previously. Bit thin, bit hard to trade here, but perfect little VCP in here. First, second, and nice little third tight here. Again, we correction on no volume, then started to tick up here, and then we popped and run. It's had a bit of had that 1 day sell off here so far. Be interesting to sort of see where this comes back. I mean, I like for them to come back to the break zone. So came back to say maybe 40, 42 cents, something like that, that'd be interesting. But hopefully it uses up a bit of time and comes back here. But that looks quite good actually, Task. Looks a little better on the weekly. That's looking a little scary, the volume, but yeah, we'll see what sort of follows that. LGL was number 23. Nice VCP in this one, Chris. A little bit choppy, like it's obviously a bit thinly traded here. This is our sort of first pullback here. Has a bit of a pop here, and then tightens up again. Sort of pops here. So it just has 2 or 3 days sort of under the high. That sort of David Ryan sort of signature consolidation under the high, and then it's popped here again. The volume's a little bit erratic, so it's a bit hard to trade there. But not a bad little pattern there. Had a bit of a pop here now, so it's probably too late to be coming into sort of something as a liquid as that. ASB I thought was okay. It's sort of, I thought it was interesting. Sometimes when you see the big pop out of the range, big volume there, it's hard to follow some of those trades. It's also, because you've sort of got such a big wide range day, the question you got to ask yourself is, where do I buy this and where's my stop and how high can this go? And then on that basis there, it always makes it difficult for me to trade that type of move because the risk reward settings are not there. There's just a lot of what ifs in that analysis there. So it doesn't really sort of give you, there is amount of risk with those things there. So you're looking for these things sort of maybe to pop here and then maybe pull back there. And you want to sort of see that pull back and come back on lighter volume there. So if you wanted to sort of buy this here, I would be waiting for a little pullback, tighten up and stuff there. And then at least that way I give you hopefully a slightly better entry, hopefully some better risk reward parameters as well if you really want to, if you really liked it.
I know on that pattern, talking about William O'Neill again, there's the William O'Neill disciples, they call themselves, as Gil Morales and Chris Karcher. And they studied this pattern as a sort of an early entry into some of William O'Neill's setups for cup and handle and the like. And their analysis was that if it trades more than 150% of the average volume, which clearly ASB has, when it jumps up, they call that a buyable gap up. But just like you were saying, you probably would have been stopped out because the stop they put in place is at the low of that breakout day. And that's kind of what you're saying. It's come back, but it's been low volume.
Yeah.
It's hard to trade, definitely. Even with all that analysis they've done, that's a hard one to trade, that one.
It is there because then where's your sort of, where you stop there and then what's your thread, you're going to have risk reward parameters there. Can it get that high? So, this is the thing that, like a lot of rookie traders, when they first sort of start here, they'll often try and buy these sort of stocks that jump on good news. And that's all fine. You might get it, might keep going, might follow through. But you always got to, where's your stop? What's your risk reward parameters? Doesn't meet sort of, because oftentimes, if you saw that after a day here and you say, I think this is going to go higher, I'll buy it at $2. Okay, well, where do you think it'll go to? And where do you put your stop? Maybe I'll go another 20, 30 cents. Okay, well then your risk should only be maybe a third of that. So maybe 6 cents. Oh, that's too tight. This could come back after that move before it. Well, exactly. So this is the whole risk parameters around trades and stuff there. Is it's got to make sense mathematically as well. So that's why sometimes working with a spreadsheet, having a risk reward parameters there. You get emotional, so you see something, you get excited, but then when you actually write it down and work it out, you go, oh, that doesn't look so juicy. Whereas, we talked about ABC last week, when something's so tightened up here, if I'm only risking 5 or 6 cents to make 8 times that, my 40, 50 cents, then that does look enticing. Makes all the risk criteria there. So that's what we really got to sort of weigh up there when we put trades on there. We shouldn't just be buying stuff because they look good. We've got to do our numbers. We've got to do a little, even if you sort of do it in the back of an envelope, your risk reward sort of, where it stops there, because that'll rule you out. And because if you got two trades there, Chris, one's only got like a 3.1 to 1 risk reward, and the other one's got like a 7 to 1 risk reward, and the 7 to 1 is in the sector which is hot, and the 3 to 1 is in a sector which is not. Where should we be allocating our capital?
Oh, that's easy, as you
Yeah.
say. It's like the top third. You want to be in those groups. That's the sectors and low capital risk. But
I doubt most people will actually look at that, to actually do that, ask themselves that question, or actually analyze that point there. So that's why sort of always risk parameters always important there. DUG's been pretty firm here. This has just been, again, just all those consolidations there so far have been really, really light. Plenty of pullbacks there, but light volume so far. So again, we're just waiting for a little, maybe this will pull back again, have a little bit of a breather, go again. But we're just, we like stocks that are trending up. So, the paradox there, obviously, the stocks that look too high continue to keep going higher. That's obviously the case of DUG.
Well, interesting on them. Just on DUG, I noticed that they're in they're working data, service solution, computing, but there is an element in the geolocations that they're in. And I did note that the geolocations on the thematic, that's the second strongest thematic on the ASX. And you've said for some time, you traded a little while ago, 360 quite successfully. And interesting that space that DUG and 360 are in is the second strongest momentum theme on ASX. And that chart there is probably a good example of strong momentum, I'd say.
Yeah, so 0, 360, MP1, Dicker Data, I'm still in profit there. They're all in the right sector at the moment. Whereas some other stocks in other sectors that probably haven't performed so well. So it does pay to be and we've seen obviously the lithium play there's been pretty hot as well. So there's been some some sweet spot in there. Just talking about sort of the hydrogen stocks as well. They did jump in the weekly launch pad there a few weeks ago. So they've sort of gone on. So just look for these sectors that are showing strength there. So EML was the last one on the list, number 30. So look, I'm not a massive fan just because there's a lot of headway to go in there. But it's still looking somewhat constructive there. On that DUB, the DUG, sorry. The one thing sort of here, and I sort of try to, people are sort of just starting out doing charts and stuff there, and I say like I do think that price action and volume are the two key things. But the other thing I do like is that the 50-day moving average, I think, is just such a interesting thing to sort of have in the chart as well, because you'll still sort of find here that it doesn't work every time, but a lot of stocks once they sort of tend to break above the 50, just tend to sort of climb here, and we've threatened the 50 a few times there, but we managed to sort of keep staying above it and then just kind of rolling through, and then they can kind of really cool off there. I saw a stock yesterday, I think it was AX1 here. This is obviously a retail stock here, and that, again, broke out of this base here, sort of, went to a new high there, broke above the 50, climbed there, managed to come back and touch it. Again, not all stocks do this here, but a lot seem to do this. They'll come back and retest the 50 and then keep going here, and then eventually it broke through. So, as a generally good rule, then this is actually one of William O'Neill's rules, is actually he pretty much, if the stock breaks below the 50-day moving average, he's out. So, if he was writing the stock here and got sort of set here at, what close was that, 144 or something there, if he sort of bought that stock above the 50-day moving average there for whatever reasons there, he would be getting out 238 or something there, so basically he would be out on the day that it actually closes below the 50. We saw it, it's sort of cutting the 50 maybe here on big volume there, which it was. It didn't look so good, but it closed below the 50. He's pretty much out there. So this is the thing. One of the good thing about William O'Neill's method is, and this thing about momentum stocks is, you as the momentum's running, you're you're running with momentum, and that's when you can make, the super performance, and you actually get, you're concentrated, and you're getting the bigger returns with these sort of stronger stocks. But once they turn and break down, you got to get out of the way, because these momentum stocks, we've sort of shown in the past, these are the stocks that can go up 50 to 100% or 200% or 300%. They're the big movers, but once they're done, these are the stocks that have the big declines as well. So we do need a method to actually get out of those sort of high momentum stocks here. So if you haven't been edging your stop up here, the 50-day moving average is just that should be your last bastion. I figure, your stops probably should be coming before then. But if you're holding a momentum stock and it's broken below its 50-day moving average, there's a reason why they say nothing good happens under the 50-day moving average. That's, you should be writing that down if you're trading momentum stocks, because that often, that's a really key sign there.
Definitely. But as you're like showing there, it's that share AX1's conforming to the 50-day moving average as a trailing stop in a way. And that sort of echoes in, probably too detailed for this conversation now, but the commodity trading advisors, particularly common in the US, those futures traders, once some moving averages cross over, a bit like what you were showing in the base here in October 22 for AX1, when it crossed over the 50-day moving average, you add the 10 and the 20, those blue and green lines getting above the 50-day moving average, the red, that's a buy signal for them. And then the sell signal comes just as you're showing up at the other end to get out. There's a lot of money that follows that strategy in the US trading futures.
Yeah.
For good reason, obviously, and off the back of William O'Neill once again.
No, that's right. Yeah. So obviously the trend traders, they use the sort of moving averages there. So they might have they might have a signal to go long, and then there might be a signal to get out, and then maybe a neutral zone, and then a sell signal as well. So oftentimes there can be a neutral zone there, sort of where they're not getting in, or but once it usually, but a lot of them are either short or long the whole time. So based on this sort of moving average crossover. So you're going to get chopped up in periods, but the whole idea is to catch that big trend and then to get out before it breaks, or sorry, as it breaks, and then to actually capture downside as well there. So I thought number 7 on the weekly list here was DUBA, if I'm not mistaken there. So which I think is I think it's like sort of sort of like
audio visual
internet calls. I think it is from something like that. So this is sort of interesting here. Just obviously look, obviously definitely a laggard here, but we're definitely seeing a lot of the sort of small cap growth stocks I mean, if you've been following the Russell 1000, 2000, it's underperforming here. We've talked about how big caps move first, and then mid caps go second, and then small caps sort of join the party last. But just a bit of volume starting to come in here. It's a possible change of character. There's a bit of volume down here near the low here, so maybe there's some accumulation there. But just like the fact that the stock here basically sort of meandered down here, and after this really long-serving downtrend here, just really didn't sort of get going down. So the sort of selling has sort of dried up here. So just starting to see a little bit of activity there. So this is definitely one to keep an eye on there. Just sort of starting to turn up here. Surprising that sort of number 7 there just probably shows you that the market's been a little weak here. But that is definitely holding up. ZLD, I think I got this one as sort of too hard here. Just so it's had that big pop again, massive move there. I think that's sort of in that biotech there was some biotech sort of data there, which was positive. So, they sort of tend to pop and then they'll cruise back again. And but just one to sort of keep an eye on. But probably too hard for me personally. AKP was sort of, again, as per the list there, keep an eye on that one there. One I did like here actually was APM, which is that APM Human Services International, which is sort of around that. This company's only been sort of around for about 18 months. Does a lot of the charity services as well, and but if you look at consensus earnings of this company, actually it's sort of forecast to grow pretty strongly in the next couple of years. And again, you sort of find when they sort of come, these new sort of floats here, because they've only been around for not very long, they come on sort of hot, they sort of tend to fade here, and people lose interest in them, and they sort of come back a bit. So this is sort of one that has sort of, I've sort of been watching this for a while, just because I know it sort of came back to a new low, but it just continued to fade there. It's literally just kept going lower, lower, lower. But I just noticed we started to pop here, break a few highs here, some volume coming in there. So possible change of character for me. Bit early there, but definitely a stock to keep an eye on there. Sort of consensus earnings is pretty robust there. So yeah, it's definitely one to watch there. RUL had a bit of a pop on some volume there. Again, probably broken above a couple of swing highs there. So that's pretty interesting. Pretty early days there. Brainchip sort of in there. Won't be getting my money there, Chris, this one. Yeah, I know it's sort of like, starting to sort of, break a few swing highs there. Look at that, it's had a bit of a rally here, bit of a struggle to get up here, and then whack.
Hit on the head pretty hard.
Yeah, Anyway, so we're trying to rally here again into all this AI sort of frenzy here. So you're getting, so this is sort of in a sector which is on fire at the moment, but it's a laggard, so it's really, really struggling here. And it probably got to do with the fact that there's just so much headway here as well. There's so many people who bought this, that's when you're sort of when you got years of sort of buyers who have bought at much higher levels, any rally they're going to be sort of selling into it. So it just sort of stops it. That's the thing about, the paradox of actually, once one stock's got a new highs is that no one's sold them there before.
Everyone's in profit. Yeah.
So there's sort of no need to sort of sell them. That sort of often propels these sort of bigger moves. Whereas, if there's people, you've seen those, like the trend spider, how you see where all the majority of the buyers are sort of bought them in the middle level. They struggle to get back there because there's so many people looking to get, break even or near there, that it just will never really get through there. That's the sort of one of the reasons why these sort of stocks that are really being hit pretty hard here, and even worse if they've issued more shares as well. But yeah, POS was sort of one to keep an eye on there. Bit small for me, but did have a little bit of a pop. Okay, volume, probably pretty tricky. We talked about Appen there running there. I sort of expect this to sort of cool and consolidate at some point here soon. EGG had a small pop here, but no volume there. So again, wouldn't be getting my money. CMM, this looks pretty interesting to me. I thought this actually looked quite good here, Chris, just because it's sort of pull back here, narrow pull back here. So we're sort of starting to break out of the range there. So the daily sort of looked interesting to me, looked like it can kind of rally here. When I sort of drilled into the weekly, this sort of had me a little bit more concerned. I never like sort of seeing this correction here from the high is what I call like an overbalance. That's the largest correction of the whole move. So potential overbalance of the trend. So sometimes they can come back, make a lower high, or they can actually go to a slight new high and then fail there. So this, coming off this high here would have had me pretty bearish, this stock here, thinking this will probably go to a new low, but it hasn't done that. It's had a decent follow through, but then it sort of bounced here, but then would pull back again. But this is probably a bit, look, the trend is still sort of up here, but probably not one that I'm super excited about just because of that. This is overlapping. So this, to me, this is more like a sort of sideways trend. I mean, initially we had big volume here. I think it broke out to a slight new high, failed there, came back and, did that little marginal new high, come back and do a marginal new low, and then it started to build again. Had a pretty good run. Whole thing's come back, sat on top of the previous high, which is constructive, all great. Had a really, really strong run. This correction is a bit too deep, and then you go back and retest here. That's always, to me, that's what this is how a lot of stocks sort of find highs, like that point there. So yeah, so look, it might be one that pushes higher. That's just all I know is that a majority of stocks that do this end up sort of going through a larger corrective phase. So be interesting to see what happens there. Like the short term, the daily looks quite good, but I say that there's probably not a ton of volume so far. It's only really 1 day of volume there so far. It's been all pretty light there. Whereas at least in this rally here, we saw some pretty good volume there, which sort of gave it a little bit of legs. But so far, pretty light in here. So yeah, that's me for the day. Hope I didn't ramble on too long, but yeah, I guess it's interesting market out there. Sort of, we've had a fair run here. The market starting to get a bit more choppier there. Definitely finding it a little bit more difficult to find good trades there. So yeah, so I think maybe just I think it's that point in the trend where maybe you got to get a bit more selective there. As I say, Chris, stick to the stronger sectors and trade those good sister companies in the strongest areas there.
Well, that's a good wrap for the weekend. To go into that with a lot of charts to look at, to unpack, and good insights to stay with those top leading sectors. And we will be looking at next week, getting access to the list at the same time that you do, this 30-30 list. So we'll talk more about that next week. But that's probably a good point to wrap and say there's your Tuesday report on the right-hand side. There's a full playlist of all of those where you're breaking down your trades, your portfolios for your clients. And then also on the right-hand side, breakdowns of those strategies and patterns that you're talking about, high tide flags, volatility, contraction patterns, and a lot of the things that William O'Neill follows from a momentum investor. Then also on the left-hand side, that's your Twitter handle. If anyone wants to follow Gary Glover, it's there on screen now.